Episode 2, we're back. It's the 4-part mini-series. Fuck yeah, finance, February. Nailed it. So episode 2, in episode 1, we learned about the awareness. We knew what to look at, which numbers mattered, and you can't save your way to $1 million. This episode now is all about rhythm and planning. The last word you left off with in the last episode was figure out your plan. This is how we figure it out, okay?
Yeah.
The goal here is you go from having fucking surprises at the end of the month, like I did, in our business.
Everyone.
We thought, it's like, it looks like there's $10 in the account, and then before on the last day, another bill.
Yeah.
And it's like, shit.
Yeah.
So from surprises to systems and how to budget, forecast, and track.
Yeah.
So.
Awesome.
Over to you. So we've drawn this 4-quadrant here.
Yeah.
There's things you need to do every year, every quarter, every week, every month.
Yep.
If they get this in place, happy days, right?
Yep. So like, again,
Let's do
if you go our job here is just simplify the what people need to do. Like if you go, the first thing was the what.
Yeah.
This is kind of like the when.
Good. Okay,
Yeah.
so this is the when.
This is the when.
And the point of this episode is, by the end of the episode, our lovely listeners, who we love to bits, are going to stop reacting emotionally to the money and actually start operating deliberately.
Yeah. And I think,
Financially.
like you said this to me before, like the outcome you want is that this is booked into their calendars.
Yeah. How often should I look at my numbers?
That's it. And because that's the number one thing I try and tell them at the end of it is like, just make sure if you book in the sessions, like if you book in the weekly thing.
That's really the homework.
That's your homework. If you book in the weekly thing, you're going to give yourself the space to actually do it. If you don't book it in, then you're always going to find, especially when it's something you hate, you're always going to find something better to do and you'll never actually fucking do it. So book it in.
Let's do it. Should we start, homie?
I'll start annual. So we're talking about planning. Normally for 99.9% of people, we're making annual plans.
Annual plans. What's that otherwise known as?
So financial, we're talking budgets.
Budgets.
Everyone loves budgets.
Budgets. Budgeting. Is that with one, two? We're just going to go for it.
I know, budgeting might be two.
Whatever.
Budgets one.
We're going for it. Budgeting and planning. So what's involved in that?
So I like annual planning process. I don't know what you do with your team, but let's just talk through what game plan. I sit down in a planning process with both like an idea of what I want to spend money on, like P&L thinking, but also strategic thinking. Like, am I opening a new gym? Am I hire? Like, do I need to hire new people? Like, you start to think about what does the business going to look like over the next. What are my goals over the next 12 months? So you do those. You do your very detailed goal session with your team and with your members. That has to be tied to a financial plan.
So goals next 12 months.
Yeah. Goals and strategy, like plans over the next 12 months. Like, what are we trying to do? And then I tie that into a budget. What's budgeting?
What is budgeting?
Yeah, if you think about, or how do we go about it? If you think about, like, you asked in the last episode, everyone go to their accountant and get their last 12 month of data. Like, it's a gym. It's not a super complicated business. Your last 12 months of data is a very good starting place for what your next 12 months are going to look like.
Yeah, trends.
So you take the trends of the last 12 months. The first thing we're going to play with is our revenue line. It's like, we've got this many members now. We plan to grow at this rate. So if we just increase our members per month, what's our revenue going to look like over that time? If you go back to that, we're going to run the business deliberately off percentages. We know we're going to spend 40% of that revenue on labor costs. When should I be hiring the next? Like that's how I start looking at the decisions I'm making. It's like, all right, well, 40% of revenue is now an extra $10,000 because we've grown the business X amount. I need to hire some people there. So that budgeting process is just about looking backwards to get the trends and understanding your ratios, then using that to plan 12 month forward.
So the first thing is, so we start with trends.
Yep.
Then we put that through the ratios.
Ratios and also like a sales growth.
Ratios and your goals.
And your annual sales goals, yeah.
Yeah.
And that largely drives the majority of the work.
Yeah. Which should land at like your budget.
Then like your budget's done in an hour.
Oh, Ross, it should only take an hour.
If you've done the planning part first of like understanding where you're taking the business over the next 12 months, this part of it's not difficult because if you're opening the gym for the first time, it'd be harder.
So where are the mistakes here that people make?
They don't do it.
Okay, so I'm going to write. Are we going to draw much more in this box before I start drawing mistakes?
Annually, like truthfully, I'd do an annual a cash flow forecast as well. I'd build that. So we'll talk about that separately. But that's
well, like I guess if we just talk about it, one of the things that you fucking switched on in our brains was everyone's pretty good at making some numbers look good in a spreadsheet.
Yeah.
We just start at the top and we're going to go every single month at 10, 12%.
Ben used to be the best. He'd send me a new P&L with these big numbers. The numbers look pretty. How are we actually doing that?
Correct. And then you said something that just hit us like a fucking ton of bricks, and we've been doing it ever since. And we call it the reverse forecast now.
Yeah.
Okay. Which instead of starting at the top, depending on how you went in episode 1, if you didn't like the number at the end, start there.
Yeah.
To then work out what your sales targets need to be in order to hit every branch on the way down, every ratio on the way down. So the fat number down the bottom is how much you want to earn.
Yep, 100%.
By the end of the year.
Yeah, that's that goal setting piece. It's like...
So I think like the biggest thing here is do it in reverse.
Yeah, mad. Yeah, pumped.
That's the session that you run with us internally in the academy.
Yeah.
I just spelled reverse.
Which was where how are we going to get to $1 million studio essentially was your...
So profit first, right?
Yeah. It's taking that same convo that we had before about trends and ratios and that, but just getting to like how many members do I need for that to work?
Yeah.
And then you broke that down in your business and the studio should break it down like, all right, well, what are the activities I need to do to get those members? And where's that? You said before, like, do I need Canva Pro or not in the other episode? It's like, what are the activities I need, the things I need to spend on to help me get to that number? Because I know once I get to that number, all my ratios are going to be fine.
What activities needed?
The other thing I think we've spoken about in the past, and I've said it to the other members, like the reason why we push really hard about this planning stage and being really deliberate about the overspend is it's really easy to get fat in business and it's really hard to get skinny again.
Wow, that's a line.
Like life.
Like in life.
Like in life. So you need to be really conscious that the decisions we make to overspend to get us to this profit number, they are all reversible, because if you don't deliberately manage that, you'll stay fat forever, kind of thing.
Tell me about it. Hang on, there's some nuggets here. So, and I want to put another Easter egg for episode 4.
Yep.
The point of these businesses, which we should say, is to generate cash that you can then go and put somewhere else.
Yeah.
To create wealth.
To create wealth. Like if you're in business to run a gym to have 100 motivated people around you every day to make you feel good,
you missed the point.
You've missed the point. Just go be a trainer somewhere.
And you might get paid more.
You 100% would. The whole point of what we're doing here is to create like a lifestyle for your family, a future for your kids.
Generational wealth.
Generational wealth.
So,
and it's it's hard to get there in studios when all you're thinking about is writing a better session. You can't fucking
I want all our studios at $1 million to be spitting out 300,000
which they should
profit and being paid properly.
So think about them on 80 to 100 grand salaries. 300 grand profit. You're making 300 to 400 grand. Like
which in episode
that's special. That's not an easy thing to do. It's hard. Like,
and then what they can do with that, which we'll talk about in episode 4.
Amazing.
It's amazing, right?
Yeah.
Okay, we'll talk about that.
So bringing it back, all of that thinking though comes from here. It's like, all right, cool. We're trying to get to $1 million studio. Over what time frame? Where are we spending money? How are we doing that? That's that annual planning session. And you do a great job with your team and I'm sure the clients in building that out with them. But like everyone does it. Like you've got Benny in the business to take all your vision-based stuff and then turn it into spreadsheets.
Yeah.
They need their version of taking the words and the vision and creating it into a spreadsheet that actually
and a plan that they stick to.
And this is harder than like when I say it's an hour exercise, it's an hour exercise for an accountant. It's not, I don't expect them to sit there and do their own budget fully by themselves. Like I'd love the owners to do a first draft of the numbers. So I keep pointing to it. Nate told us we have to explain it.
Yeah, we're pointing at
our annual budget.
Watch it on YouTube. It's body.
I don't expect them to do that all by themselves. It'd be great for you to at least think about the revenue number and your own goals and your game plan, and then go sit with someone and build that out. You're not going to be an Excel expert in Excel, but that work once a year to spend the time. How much time do you spend on your annual planning?
Yeah, well, because now we've got the 3-year vision, right?
Yeah.
There's a book line like what? Now we've got the 3-year vision. Like we know what we need to do.
Yeah.
And we've got spreadsheets. Half the battle is having the right template, right?
Well, do it once, it's done. I completely agree. But you still spend, I know you're writing your book and stuff, but you still spend days thinking about it. And you still spend, and Ben spends ages in spreadsheets.
We actually take the team away.
Yep.
To do this. Like a lot of other companies do, like they do an annual retreat. We brought the whole team down, Christmas party.
Yeah. It's awesome.
I was walking around with
Santa and
no pants
else.
on. Yeah. It's standard.
Sure, everyone loved it.
Yeah.
But yeah, like don't put, again, homework, put it in your fucking calendar for your 2-day annual retreat, whether you're by yourself or with your team, I don't care, but spend that 2 days building out a game plan, getting the bare bones of what you think your spending is.
Don't you reckon?
Yeah, be mad.
I'd love
go
to
to Bali or something and tell them all to come.
Okay, where would they put that? The P&L?
They can put it.
They
can budget it and put it in travel. It's fine as long as they budget it. Where would they put that in the P&L? But yeah, put the time in to do it, and then grab the help that you need. That should happen annually, and then we should be building a cash flow forecast. That
all right. So that's different. Is that different to the that is a reverse forecast, right? Or is that?
Well, I think about the budget like your P&L operational planning. So if you think about the budget as that operational P&L that we spoke about before in episode 1, I think about the cash flow forecast is just the next level of that, which is like on a week-to-week basis, where does my money go when? Because on top of that, you have like loan repayments, tax payments, things that come in and out of the business on different timings. If you got the P&L right, all of that kind of looks after itself over time. But again, like expert masterclass is like, I've also got a cash flow forecast and I have my finger on the pulse like 3 months in the future of where my cash is.
Quick pause. There's some homework at the end of this episode. If you want something to jot this down in, you can download the simple worksheet from the link below and look at it after you finish watching. Grab it now and keep going. Okay, wait, pause on that because I really want to unpack that. Do you think that goes, have they figured that out here in annual?
I figure it out. Like we do our cash flow planning at the same time.
Annually?
Like it's built out at the same time.
What should our owners do?
Annually, yeah.
Okay,
so I think they should.
What's that called? Cash flow
forecast. Like you build it annually, but like you said about the Excel template with your budgets, the hardest part is getting it done the first time. Once it's done, it stays relevant forever.
Should we do as obviously speak? So like yes, annual. When is it? Like do you snap it to the financial years?
Like again, best practice. Yes. Does it matter? No. Like if you said I'm going March to March, it doesn't fucking. It's just a 12-month cycle.
Yeah.
It's just that financial years or calendar years are the excuse.
Do you reckon, I'm speaking of draft, this is the idea they're going. Do you reckon at some point, like could we do this live with our podcast audience in an auditorium somewhere?
Yeah, 100%.
Or is that...
Well, it's what we done. It's similar to what we done at Queenscliff with the team there.
Yeah.
So the struggle is took an hour for everyone to find their zero logins. So everyone has to come with their pre-workers or homework done.
As long as everyone walks in and they're logged into their zero.
Yeah. That's a big part of the battle.
And they've got the pre-work done with their account.
We should do a little session on this is what we'd want you to do before you're allowed to come.
Okay.
Provided you've ticked that box, come and then we'll break it down live and get into the
detail. So by the end of it, they've walked away with their done
budget.
This.
Yeah, they've done their budget and their forecast. But they've built the framework before we get there.
All right, audience, before we go off, and this could be a stupid idea. So if you want this to happen, what should they do? DM me on Instagram, hey.dozer. Hey, you guys know me. Hey.dozer and message me the word... Forecast. And we will know... forecast live.
Yeah, fine.
Forecast live. And if there's enough of you, we'll do this live together so then you can head into the new financial year going, I've got one of these.
Yeah.
I'm a fucking mad dog.
Yeah. 100%.
Okay.
So like, again, winding back before we move to the next one. Everyone should do budget and planning. The experts... Everyone should do cash flow, but I'm happy if
this is the pro move.
That's a pro move.
That's what it's saying. It's a pro move.
Yeah. That's it. So just make
our
sure
audience are pros, dude.
Yeah, get them happy.
Would you how quickly could you draw one of these? Like just like we did the P&L.
It's a couple lines after the P&L. It's not a big deal.
Okay.
We can do it quickly.
Okay.
Yeah.
So I mean, like if we just did it here.
Yeah, let's give it a crack.
Let's move this. If we just did this here.
So let's just pretend we got to the bottom of the P&L where you got operating profit.
Yeah.
So let's go operating profit right at the top. I mean, if you want to do cash flow as a heading.
Yeah, cash flow. Oh my God. Cash flow.
Forecast. I'm just going to give you the headings and then we'll go into the data. So operating profit.
Yeah.
Like I'm just adding the additional lines that
Sure.
would come up. You're then going to have, you potentially have like discretion, because we didn't talk about this in the original P&L. You would have other spending, like your discretionary spending that we weren't talking about as part of operating profit.
Yeah.
Like your motor vehicle or your family holiday, like all the stuff.
Fam holiday. It's not really.
It's not business related.
It's not business related. Yeah. It's not core business related.
No. It's just like
if anyone's going to buy this business, they take all that shit out. That's an add back.
Correct.
Okay, cool.
Then let's get to net profit.
So just now it's net profit.
Now it's net profit. So this is our real profit number.
This is so that's good. This is like, will the real Slim Shady please stand up? This is the real net profit, please.
Yeah,
that's this one.
Yeah.
Which is that operating profit up here.
Is your gym profit for running a business. Then you got all the other bullshit that's not real that you just put through because you get a tax deduction for it.
And you're a lever.
And you're a leb. And then it gets you to your net profit number.
Yeah.
Then we've got, so to get to cash flow, it's like, what are the other things that come out of the bank account that aren't? So often the gyms have been purchased from someone, or they've got equipment on finance, they've got debt repayments.
So is that under here, or is this a new line?
You can, no, it's a new category.
Category. So what's that called?
Let's call them like balance sheet movements.
Yeah.
Like they're just cash flow movements.
Other cash flow.
In a proper cash flow statement, they're broken in sections. I'm just going to simplify it. So other cash flow movements.
Including loan repayments.
Loan repayments. Tax payments.
Tax payments. So this is provisioning for...
Well, they've already, not loan repayments, the tax is already kind of provisioned. If you're talking about cash flow, the way, again, thinking about it, every week you get the sales that hit the P&L is $100,000. You're really getting $110,000.
Gotcha, because of the GST.
Because the GST is landing. So that $10,000, if this would have columns per week, that $10,000 is landing per week. Then you get to week 13, and then 10 times 13, 130 comes out.
Gotcha.
Does that make sense?
Gotcha.
So I just have a line called tax payments.
Tax payments.
And then I have the money coming in every week that I'm getting of like GST.
That needs to be landing in there.
That's landing in there. Then I have on the week that my BAS is due, you have a column that pays it out. And
so this is a weekly view.
Yeah, I do my cash flow forecast as a weekly view.
That's important to know.
Yeah, sorry.
No, that's so good.
And then like largely the only other major in gyms, the only other major moving item is like asset purchases.
So they've bought a new equipment pack.
Like, yeah,
they've got squat racks.
I'm going to go spend something big.
They've just bought 17 reformer beds.
Correct. So they're big spends.
So that's the asset, like it's the asset hire repayments, right?
Asset purchase.
Asset purchase, yeah.
Because the repayments will come in
here. Yeah. But that might also be the loan that you got off your mum to get the thing.
Correct. Can be anything. I'm giving them as higher level categories. You can break them down further. Then my columns now would be my week 1, week 2, week 3.
Here we go. YouTubies and Spotify people, you'll see some stuff going on.
Yeah, so week 1, 2, 3, 13 weeks in the future.
13 weeks because?
That's a quarter.
So I'll just write blah, 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 blah.
To
13.
Yeah.
Yep.
And that like largely that's it, mate. Once you set this up properly, you know your budget that you would work on annually would drive what your operating profit is per week.
Yeah. So let's just throw a number out there.
10 grand.
10 grand.
Yeah.
Oh, let's use the same 100K business.
23,000. That was for the month. So
100 divided by what?
Let me get you a calculator. I'll just do it times 13. Times 12 divided by 52.
Oh, because you're running off the net profit, right?
Yeah, 5,300.
Okay, so this is running off net profit divided by the weeks is 5,307.
Like we've made a massive assumption there that every week's equal.
Sure. Let's just whatever.
But yeah, 5,300.
Yeah.
Let's pretend they spend $300 on their car. Yeah.
$307.
Yeah.
To make it easy.
Perfect. So now you're down to $5,000.
Now we're down to $5,000 as real net profit. Slim Shady, we'll call it.
Then we have a $2,000 loan repayment.
Yeah. Back to the mob.
Yeah. And then we receive, so that's negative.
Yeah. So let's
put in brackets, and let's put this in brackets too. So that's negative.
Yeah.
Then because we've got, we don't have to pay the tax this week, but we received the GST. Let's pretend we got $8,000 in GST. Like this is GST that's landed in our account from our customers.
Yeah.
That's not on our P&L.
Yeah.
Yep. So that would be $8,000 positive.
Yeah.
And then we're not buying any assets this week.
Yeah.
So week 1, our net cash.
So the line here would be called net cash.
Net cash, yeah. This is obviously very simple.
I know.
Yeah, perfect. Net cash, 5,000 minus 2,000 plus 8,000. So what, 3,000 plus 8 is 13,000?
It's
11,000.
11,000. How did I correct you on that?
I'm an idiot. 11,000. All right. So same concept now, week 2.
Yeah.
5,307 lands again.
Yeah.
307 goes out again.
Yeah.
$5,000 net payment.
Yeah.
Net cash. We don't have a loan repayment this week, so that's 0.
And that's because of what? Because we're paying every 2 weeks.
Every month.
Or every month.
Like pretend most payments are monthly payments, so no payment this week, so don't make that 0.
Same 8,000?
No, let's pretend this week we've got to pay the ATO $30,000.
Okay, because of a BAS. Because of the BAS.
Yeah, let's pretend it's a BAS. So we didn't pay a loan repayment, but we got a $30,000 BAS payment.
So there's in brackets 30 Gs.
30,000, yeah. I'll let you do the maths this time.
Oh my god.
5,000 minus 30.
It's negative 25.
Negative 25.
Nailed it. And I'm only half Asian. Yeah.
I'm only half Asian.
So negative, so 25 jiggies in those situations.
Yeah. So the point of this is to, like, the reason why we do a cash flow forecast, is to know, like, we don't have we should have also have opening bank balance, net cash movement, closing bank balance.
Yeah, this is for sake of.
Yeah, and then you get to like, oh fuck, I'm going to go in the red in 7 weeks' time when I have that BAS due. That makes sense. So like, it stops that feeling.
I'll tell you what it stops. As a fellow studio owner, it stops you getting to the end. You don't even know what week it is sometimes. You get to the end of the week, and you're like, should I buy this thing? Or often they open up the bank account, like they're managed by the bank account.
Yeah,
so 100%. What I'll see is a couple $100 in the bank account, and they go, fuck yeah, and then they go and buy the new activewear.
So let's pretend you have this built, because as you can see,
I say that because I used to do that.
Yeah, as you can see, once this is built, it's rinse and repeat across the 13 weeks. All you need to know is like, when do the major payments happen and adjust. So pretend you got it built, and then you go, I want to go buy that new piece of equipment. Instead of looking at the bank account, you'd put minus $10,000 in week 4, and then you'd see, what happened to my cash?
Should they be having these chats with their accountant as well?
So yes, but most people won't engage the accountant on. I don't blame their accountants. I blame the gym owners, because most people won't bring the accountant and say, hey, help me build a budget. And if they do, and the accountant says it costs $2,000, they'll go, oh. Because whenever
we say, hands up, you've got a good accountant, no one really puts their hand up.
They don't,
it's mainly just BAS
and when they say it's good, they say, they do dodgy stuff for me, or they they don't actually.
It's a mate of mine.
So like, should they be doing it with their accountants? Yes. It's not the accountant's fault. It's the business owner's fault.
Yeah. Okay.
Change your mindset. Get it sorted.
All right. I'm happy with that. Annual.
Cool. Annual done.
That could take anywhere between 1 hour and 2 days.
Well, like
depending.
If the accountant's doing it, it wouldn't take a huge amount of time. It'd be more just pulling out of your head your assumptions. But yeah.
Okay. Happy with that.
Done.
So now I've got a plan. Now I've got a budget, and I've got a cash flow forecast that I'm walking around.
Yep. That's like 80% of the work for the year.
Cool. Now, do I just stick that in the top drawer?
Yep, done. Don't think.
And wait till I'm back at the annual again, or look at it again?
Yeah, it's like a New Year's resolution.
Yeah, exactly.
It lasts for 2 weeks. No, so we're going to move to weekly, not quarterly. So like, the point of this is this is our roadmap for the year. Built off our goals, built off where we want to go, built off our strategy. So this is our roadmap. Like when you're training in the gym, do you fucking just do weights all year and then weigh yourself at the end of the year? Right. It's the same concept. So it's like, we need the more often we keep track of it.
So this is the weekly weigh-in?
This is our weekly weigh-in, exactly. This is our weekly weigh-in.
All right. What are they looking at? What is the weigh-in?
Again, to simplify their lives, the things that we are looking at is, which you're doing half of these already, like number of members, revenue.
Oh, yeah.
So the non-financial stuff is number of members and revenue, to get that average member number. The reason that matters is, like, if I'm talking to someone on a weekly or monthly basis, I'm asking about pricing and number of members and revenue. Give me, how much are you charging per member? So number of members and revenue.
Yep.
Wages percentage.
Yep. Okay. So we're looking at KPIs.
Yep.
We're looking at wages percentage.
Yep.
Yep.
I'm not even looking at net profit on a weekly basis. I'm updating my cash flow forecast.
So they look at it, and there would be a dashboard, like there would be some kind of a dashboard. Yep. We run a dashboard in the academy. We've got Friday numbers. So every single Friday, they do their weigh-ins.
Yeah. We should incorporate this into your weigh-ins and make it part of what they have to submit.
Yeah. 100.
Yeah.
We should do that.
But yeah. Someone do it.
Someone. Yeah.
But yeah, wages percentage, and then update your cash flow. Update your forecast. You know how we just done week 2 in there? Each week you'd update the next forecast. Week. Yeah. Like you'd have assumption data in there. You'd update with actuals each week, so it would re-push the assumptions.
I've got an idea. This is going to be a banger, but we'll wait till episode 4.
Done.
Okay.
Sit on it.
Update cash flow forecast. So yeah, perfect. So Friday. So we call it Finance Fridays.
Yeah, perfect. But you only talk about KPIs?
No, in our business.
Oh, sorry.
Yeah, so even in our business, like we'll run the numbers, like all our numbers, all our KPI scorecards, the CEO scorecard, we call the signal, that snaps to, like Saturday to Friday. Yeah. Like it's
So talk to that for a sec. Like when you first started doing that, frustrating, took ages, getting everyone on board hard. Yeah. Once because I know that's part of your routine now. Once that's part of the business routine, it actually ends up being a positive the other way. Like people get excited by the numbers, if that makes sense.
Excited and like autistic with it.
Yeah, yeah.
It
flips fast.
It's autism.
Yeah, it flips fast.
And now it's into departments now. It's like I know what old mate should be doing, how many times a day. When we get to the point where we realize as a leader and as a manager, we're managing to the numbers. Like we're managing the numbers, not the emotions and the people.
Yeah, yeah.
Business feels good. We call that in our academy. That's sort of level 2. We call that KPI leadership.
Yeah,
and it makes things really clear.
Yeah,
and it's red, green, and I'm dumb, dude. So if I see a red typically means bad, unless you're in China.
Yeah,
red, orange, and green.
Yeah,
green means good, dude.
Yeah, yeah. It's not hard.
It's not hard once it's set up. And we've got all the templates anyway, so we give everyone a head start.
Like the point I guess we're making is, we want them to book it in their calendar. The first month. Like the first 4 weeks will be the hardest 4 weeks. Once you get through that,
like starting at a gym.
Literally, once you get through those first 4 weeks, it's the fucking. This is a 15-minute exercise. This isn't. This is nothing more than that.
So cool. They do that, and they upload. Then they update the cash flow forecast. Yeah, dude, that's what we do every Friday. Our members in the academy run that every Friday.
Yep.
As a business, we do Friday numbers as well, and then that sets up. So Monday morning, everyone rolls into the meeting on a Monday. So that's probably what happens as well. Like we actually, can I add something here?
Yeah. Talk about it with your team.
Yeah. Monday, it's the Monday meeting.
Yeah.
I don't know if you're not doing this and having team meetings, I don't know what you're talking about.
Like, someone left their towel on the floor. Like that's literally the convo. Like no one packed up the weights after their session on Friday.
Yeah. We take these numbers to formulate what needs to be true for us to win the week.
How do we change? What are we adapting? So we have the same. We have our Monday meeting. It's full like KPI based meeting.
Yeah, it's KPI. And listen, wins. We talk about the KPI for 5 seconds. We only talk about what's
the
red.
Reds. It's fucking.
Okay, cool.
We don't need to. It's funny though.
It's green.
Because if you talk to a gym owner without numbers or a business owner in general without numbers, the only thing they talk about is the greens, because we're killing sales. We signed this many people, these leads. They don't actually know that they're problems. Anyway, that's weekly.
Great. Love that.
And you're talking 15 minutes, and you should already be having the Monday meeting. So
you're
already doing your weekly weighings.
So 15 minutes, and it's a 60-minute meeting with the team.
Yeah, which should be happening already.
Yeah, great. I'm happy with that. So there's annual. So there's where we want to be, and then we're looking at it 52 times before we realise.
Yeah.
There's no surprises if we've looked at it 52 times.
Exactly.
Okay, what are we doing quarterly?
No, we're going monthly.
We're going monthly.
Yep. So monthly we're doing we're running our full P&Ls.
So to some like a homeless person, is it like what do we call that?
Well,
it's like you just run your monthly numbers, right? So these are the weekly numbers.
Yeah, it's what you said before about get your zero. How we're saying be able to go on zero, like get that zero set up so that you can just press one button and the P&L spits out. So it's just like
it's the monthly report.
Yeah, it's your monthly report pack, which would again level 1 is just let's get to the bottom of the P&L and look at all those percentages we talked about in episode 1.
Yeah,
and see how they're tracking and compare because you've done the budget up here.
Yeah,
compare your monthly budget to your actual number for that month. How did you track versus our budget?
Budget versus actual.
And compare to percentage benchmarks. And
versus percents.
Yeah.
Right? And then course correct.
And course, that's your first step. If this is like your are we on track? This is like your end of game. If you treat each month like a game.
Gotcha.
Like that's the end of the game. Like what was our score?
You're reviewing footage.
Yeah, what was our scoreboard? You've already you don't have to think about your forecast and that's already getting updated every week. It's just this is our are we on track with budget? Does anything? You know how I said to you how you said we used to do forecasts with pretty numbers on the Excel. This is like our check to make sure that our 12-month number we're still going to hit. It's not just it hasn't the gap between.
Are we on track?
Yeah.
Let's make some decisions. So what we do is make decisions. Are we on track? How do we go? Actuals versus forecast.
Yeah.
What do we need to course correct, if anything?
Yeah.
And then from a management perspective, I go, what's the message to the team?
Yeah. What am I saying? Yeah. Like you're talking leadership and numbers. Like
gotcha.
You're tying your leadership to the which is the right approach. It's like, hey, how's the business going?
Yeah.
To then adjust my leadership and adjust what I need needs to happen.
This is what we should be. Hey guys, let's keep doing this. And
stop doing this.
This is what we've got to stop doing this, and let's start doing more of this shit.
Basic fucking.
Stops like that, right?
Yeah, basic. But yeah, again, like most people are running leadership on like rah motivation only. It's not tracked to any result except revenue. But yeah, so it's that simple.
How long does that take?
I'd book out a couple of hours. So the other thing I'd do, before we go off there, is I do a deep dive into all my expenses each month. So I'd run the full general ledger of all those operating expenses. So not the rent and the wages. I'm tracking them on percentages. You know how we had all those other expenses that we're trying to keep between 10 and 15%?
Yeah.
I run a deep dive over those.
So, that's good. So deep dive
on overheads.
On overheads.
Yep.
Example?
Subscriptions. It's the best example. Like normally there's fat that we signed up for the 2-week trial to get access to watch this one TV show and it didn't cancel.
Yeah, right.
Like that makes sense. Like I just do a deep dive in those overhead expenses and just and it's a one reporting zero again. Takes 5 minutes. You just flick through it and see if anything's like, oh, why am I still paying for that?
So deep dive on overhead subscriptions, but leave the Geronimo Academy one.
Leave that alone.
Yeah, because that's the only one that
that drives revenue.
Makes the money. Thank you very much.
Makes a difference.
Yeah.
No. So you're just looking for the stuff where the fat, where you're like, I shouldn't have done that.
Fat.
Yeah, the fat.
Fat, not the pH, just the actual.
Yeah, the real fat. Yeah.
Yeah.
And then last thing, just again in terms of making decisions and driving performance, talking about my accounting firm, we track productivity really closely. Whatever the version of productivity is for your gym owners, if we're not in that 40%, I would then start deep diving into who's not performing and who is performing kind of thing.
So this should filter in the people conversations.
100%.
So my guys, again, Danny's bringing the finance heat, I'll bring the leadership heat here. This is when you go into your monthly one-on-ones and your team meetings and you're like, guys, hey, we really got to we're not hitting the activity levels and the sales. We're not rolling these people over. This is the KPI conversations at a team level or at a business level as well as at an individual level. You might be sitting down with your manager going, dude, mate, we're a bit behind on the budget because you only got to 60% last month in your rollovers between your new member starters and the ones that rolled over to full membership. Where do you think the gap is between the 60% and the 80%, which is your KPI? Let's work on that together over this month because if we get that back to 80%, we're home.
It drives the next P&L conversation, 100%. So that's spot on. It's all we're doing now is now using the P&L to make decisions. So that's probably 2 hours. I'd probably spend 2 hours on reviewing shit and maybe another hour in terms of getting messaging out to the different people that need to hear different messaging.
Great. Cool. So we've got an annual, we've got a roadmap. We're checking in every single week on that, which takes 15 minutes to actually step on the scales and 60 minutes, which is your Monday meeting anyway, which you should be having. So it's actually an only whatever.
And you're already doing KPIs, so it's probably an extra fucking 5 minutes.
Yeah. And then we're doing at the end of every month, we're doing how do we go for the month?
Call it a half day.
Yeah.
Half day, how we go for the month.
So this is the win the week. That's what we call it. This is the win the month.
Yeah.
Now the win the quarter, hit me.
Well, we do. I do quarterly strategy sessions with our team.
Yeah, same.
Which is the same process in terms of the finance side of things. Nothing major changes. It's a 3-month view. I'd probably suggest that people pull their accountant into that.
Oh,
that 3-month view, bring someone else in as an external point of view to challenge you on.
Run a quarterly
stuff, and then use that to run your quarterly session with your team on the go deeper.
For a rookie, you and I both know what that is because we've been doing it for 100 years. What's a quarterly? I didn't say that right. What's a quarterly?
What's a quarterly? Yeah.
I had a stroke on the way up.
For us, we use those quarterly. The way I use
what's your agenda?
Yeah, I'm not even going to tell you my agenda. I'm going to tell you why I have it.
Yeah.
Being a business owner, and I think most people experience this. It's like there's a million things that get thrown at you constantly of like ideas of things to do. I use those quarterly sessions to filter out all the noise to be able to say we're not we set the priorities for the next quarter.
That's it.
And if it's not in this quarter's priorities, it just goes on the list so that we'll talk about it next quarter about what our next priorities are.
Yeah.
So it keeps us focused on the main priorities of the business. And unless it's business critical, we're not getting distracted. So these quarterlies are used for setting priorities largely.
Totally. Academy members, you know the drill. That's why we do the sprints with you guys, okay? The 6-week cycles. We do 2 6-week cycles with a deload in between. Just so they're not just full tilt the whole way and they don't get exhausted because we're anti-burnout.
And you just set priorities to say.
Set your priorities.
Don't have shiny object syndrome. Don't think about anything else except this one thing.
Which is easy because we're all bloody got ADD.
You wouldn't be in business.
Yeah.
The agenda on the finance side is basically the same as this. Like I'm running P&Ls, I'm comparing the budget, I'm checking my KPIs. Yeah. I might be running quarterly instead of monthly or both. Yeah. But the finance piece of it, the people discussion, the deep dive, nothing changes.
It's just a 3-month view. And then ultimately what we do is we look at which 1-2 metrics need the attention, and then what are those 1, 2, 3 initiatives that will change that. And depending on how big you are as a team, if it's just yourself, you're picking one thing.
Yeah, 100%.
Well, one thing per 6 weeks. That's our big thing.
So that was the biggest mistake probably you made that we definitely made is when we started. It's like, we're going to do these 10 things.
Yeah.
And everything just gets half-assed. And now we've got like, we're doing one thing and no one talks about anything else.
When we chose 13 things a quarter, nothing will get shipped.
Nothing gets done.
We choose one thing per department now, and one thing get shipped. But 5 departments, we fucking grew 500% year on year.
And the energy that goes into one thing because everyone's clear on what they're working on is amazing.
So off the back of the quarterly, what you get is clarity.
Yeah, and also bring in external, I think, like external support. I bring Zach into every one of our quarterlies as an example.
Yeah.
Like I think always having another person in there helps.
Yeah. Oi. I mean, just look at this.
Bring us in.
Invite us.
But yeah, it just gives you another perspective. That's it, mate. That's the
how long does this take?
I do a day.
Yeah,
I do a day.
Same.
And sometimes it takes less, sometimes it takes longer. I don't care.
It's team building. There's a
have a lunch.
Yeah, have a lunch. We'll row a boat at the end of the day. We'll jump on a boat.
We do we always start them with
karaoke.
We done it on Monday. We started with what's your favorite song, and then you had to play your song, and it creates your team.
Yeah. One thing I'll do here as well that I'll add from a leadership perspective is I set a theme for the year.
Same. What's your theme this year?
Turning pro, Cuzzy.
Oh, that's right. That's a good one. Ours was 20 Mile March.
Yeah. We set a theme for the year. So every time we sit down with the team and we're having that conversation, it's like, what are you turning pro on? Team identity come off the back of this. So
it's so good.
Financials is 100% part of leadership, dude.
Yeah.
It's self-leadership, it's business leadership, and then it's team leadership off the back of that, because you can't separate the productivity of your team, which is they're aligned, they're very clear on what's expected of them, they're very clear on how they're going against those expectations, and they're very clear on the future, which is why they're going to outperform.
It's funny, man. If you don't care, if you're not going to do this, then just sell your fucking business. There's no point.
Yeah.
It's just going to be luck.
So, look, to sort of bring this episode home, so we can layer in the third episode, which is going to be how do we make decisions? Now that we've got these things in place, what decisions are we making?
Yeah.
I think what we've realised here is we're keeping it pretty simple, dude. There's a lot of things that people obsess over that is not just having these things in the calendar and just you've done your plan. So it's almost like you plan, measure twice, cut once. That's been done in the annuals.
Yep.
And what you're just doing is you're just tracking against that,
100%,
course correcting as needed,
and
then choosing your priorities to improve
that monthly report. As you're explaining it, it's as simple as it's going to be, but also it's only hard in year one. Once you do that plan the first time, and you set the theme the first time, and you set the monthly and quarterly meetings, and you get through that first year, every year after that's like copy and paste. It's so fucking simple. Your whole planning process becomes 1,000 times easier.
I want to run a live version of all of these things, but I reckon we'll make an announcement in episode 4.
Okay.
Towards the back.
Pumped.
Okay. So, quick question: budgeting versus forecast.
Yep.
What's the difference?
Budgeting, I think I'm thinking about that annual P&L, that revenue targets, strategies, etc. Forecast, I'm thinking about what's my cash
gotcha.
balance in 90 days.
That's one word. It's the cash difference.
The cash difference, yeah.
I think this episode's a wrap. So like the whole point of this was to make sure that you guys knew how often should I look at my numbers, what to look at, who do I do it with, and what's the output of those we call them containers, cadences, and making sure it's in the calendar, which is your homework, okay? So your homework is to book these sessions into your calendar, your annual planning session, which only needs to take somewhere between, an hour eventually, but I don't even care if that takes you a full day, okay?
Yeah. But don't wait till fucking 30 June to do this, to do it for next. Just do it start from next month, do 12 months from next month.
Perfect.
Who cares?
So you've got your annuals, put it in your calendar, your finance Fridays. I don't care if you put it in the first 2 hours of every single Friday. That's what our people do. Monthly, so finance Fridays, put that in your calendar. The last finance Friday, so the first finance Friday of the month is we're looking at last month. So that's the monthly one, which again, a couple of hours and 1 hour to finesse your leadership message to your team.
Yep.
And then book a quarterly in as well. And if you're a solopreneur, fucking take yourself out.
Yeah.
I don't mind. So I think what we've covered off is the core teaching focus has been like the weekly, monthly, quarterly, annual financial rhythms. Tick. Done. What to review at each cadence. Done. Difference between budgeting and forecast. Simple cash flow awareness. We did that as a separate little scribble over here.
We've got a template for this, by the way, that we built for your members. So if they need that, reach out.
Definitely. And this is how grown-up businesses
operate,
plan, operate, and roll.
Yep.
This is, let's get to here.
We're going pro.
How good's that? All right, episode 2 is a wrap. In the next episode, we're going to talk about decision making and getting fucking paid.
Yeah.
See you there. Thanks for tuning in to today's episode. If something resonated with you, then do one of two things. Either leave a review or send this episode to a mate who's in the industry who might need to hear this. But if you want more right now, because your head might be spinning and you're like, all right, what the hell do I do right now? Then in the show notes, you'll find a link to where you can book in for a free 15-minute checkup on your studio, where we get to have a look at how you're going right now and where some of the kind of quick win opportunities are to get you moving faster. I can't wait to be back in your ears next week. And if you're listening to this right now, I want you to know that I love you, I appreciate you, I'm grateful for you, and I'm in your corner. You are on the right track and I believe in you. So keep going, and I'll see you next week.